Good afternoon. My name is James Fisher, as you just heard, and we are very proud to be sponsors of this event and many other GCV events. Thrilled to introduce Amy to you and have some nice quality time with you. We have a half hour, which is more than I'm used to, so we'll get to have some good conversations here. Amy, welcome you introducing yourself and go from there.
So Amy Burr, if I haven't met you, I am the CEO of JetBlue Ventures, and been in the corporate venture capital world for 7 years now. Been the head of the firm since 2021. Have an aviation background, so have been in the airline industry for 25 years now. So that's me, and we'll talk a little bit about our firm and some things that have happened lately in a bit.
So you've seen a lot of changes over 25 years, obviously. Let's start sort of high level. We look back, we're sitting here halfway through the year. Let's go back to October, November of last year. You had some anticipation in your mind as to what was going to be happening, perhaps. How do you see that sort of in the background, and what are you seeing today that you didn't anticipate from back then?
Yeah, I mean, I think we all agree that it has been a pretty crazy start. Can we say it's the start? I mean, it's halfway over, almost halfway over now. Really crazy 2025, so much volatility, as we all know and are embracing. I think in 2024, one of the things that we saw in our own fund were a lot of follow-on investments from our existing portfolio companies. People or firms, startups that had to go out and fundraise even in a kind of somewhat challenging market, just because they'd waited too long and now was the time, and out they came. And so we were kind of hoping coming into 2025 that things would stabilize a little bit more. There'd be really a lot of really great new deals. I think everybody was expecting that the exit market would open up a little bit. I agree, by the way, we need a much better secondary market for exits. That was a good comment in the last session. And that's not really exactly how it's panning out just yet. But 2025 is actually, there are some really bright points. I just read Q1 venture fundraising, for example. Maybe not exactly what we're all focused on here, but venture fundraising, the quarter was higher than the last 3 quarters prior in terms of fundraising amounts. So I think that really showcases the fact that people are really, thinking that venture investing is, kind of the way to go at this point. Whereas 2025, I think there was a real depression on that. And I am still very hopeful that the IPO markets are actually starting to get a little bit better. We've seen some really successful IPOs lately. I know all of you probably feel the same way. We've been around for 9 years. JetBlue Ventures has been around for 9 years, and I would love to exit those early startups. Like, could we get an exit market going here? Versus trying to seek out a secondary that feels a little punitive. So it would be really great if that continues to have strength.
So I'll just seize upon that for 1 second and say, in the secondaries market, there's many of you in the room that have probably worked through it, been through it. There are definitely people in this room that can help you do that. VO2 is an excellent source for things along those lines, and Lawrence and his team do a great job. But let's just stick with that IPO market for a second. We hear, obviously, as a law firm, we are privy to certain information we can't share on these stages, but you hear things about the market potentially opening up. But we hear about it, sort of not this year, kind of early next year. What is your reaction to that?
I think we're going to start to see, we have started to see a couple really strong IPOs on technology firms this year, but I think it'll grow in strength over the year. And then, yes, I think 2026 will hopefully be a showcase year where we see a lot of, I have several portfolio companies in our portfolio that would love to see enter the IPO market. And I do think that it's more 2026 than 2025.
So just to kind of stay on that concept for a second, we're at this point roughly halfway through, if not halfway through the year.
Exactly.
It's amazing.
The year's already getting away from us.
It's exactly right. And what do you see for the balance of the year? Are we kind of in this situation for the balance of the year? Maybe not necessarily in the IPO market, but just in terms of your theories on investing.
Well, I definitely think that the volatility is going to continue. I think everybody kind of feels like that's normal now. United States, speaking from the United States market specifically, we are fairly concerned. I am fairly concerned that there will be an economic slowdown. I come from the airline industry. One of the leading indicators of an economy not doing well is what happens to the airline industry. When people stop traveling, you're in trouble. And the United States domestic travel market has been incredibly depressed since March and continues to be into the summer. And this is our peak season. I say our, but for the first time in 25 years, I don't work for an airline anymore. We'll talk about that in a minute. But it's been a real slowdown in the United States from a travel perspective. And that's usually a leading indicator that the economy is not going to really, it's in for some rough times. And so I actually am expecting that for the second half of the year. What that's going to mean, there's always a lot of opportunity when times are tough, where you can get in to some really great startups with unfortunately for the startups, but fortunately for us, really great valuations, really positive valuations for venture. So there's lots of opportunity to invest, and we're excited about that.
Are you seeing valuations, I won't say decline, but stabilized, a little bit more, let's say, friendly to you all at JetBlue and other venture funds?
I mean, I think 2024, we saw a number of, we came out of, 2021, 2022, 2023 with really high valuations.
Yes.
And then we've seen a number of down rounds over the last, call it, year and a half. I'm sure everybody else has experienced that in their own portfolio. Our numbers definitely reflect that. And there have been a couple of really painful ones.
Sure.
But at the same time, you look at that and you say, okay, well, maybe it's right sizing the valuation, because the valuation from 2021, for example, was definitely not correct, but it was what the market supported at the time. And so we've seen definitely a right sizing of valuations across our portfolio, and hopefully that leads us up to success for the next couple years with those. And then some of the new deals we've looked at, definitely, as long as it doesn't, the company doesn't have AI in the title, I think the valuation has been fairly reasonable. And certainly there's an entire sector of company that has just been, pretty very elevated.
Certainly not to suggest that AI companies are overvalued. I'm not a banker,
No,
but
I'm not
it's
saying that. I'm just
interesting how many companies all of a sudden can be AI supportive.
Yeah.
So let's shift, as you mentioned. Some pretty big news in recent times here.
Yeah. So for those of you who don't know JetBlue Ventures, we have for 9 years been a wholly owned subsidiary of JetBlue Airways, which is a United States airline, and a corporate venture capital firm. And over the course of time, we invest in early stage startups in travel technology, all of travel, not just aviation. We've invested in 55 companies to date. So really successful, done a lot of work with JetBlue in the industry, really active in investment, and surprise, surprise, we have just spun out. We spun out at the very beginning of May. And what that means is we were purchased by an asset manager called Sky Leasing, as now a wholly owned subsidiary of Sky Leasing. So as I mentioned, the first time in my 25-year aviation career that I have not worked for an airline. It's a little weird. But we are going to be doing a lot of the same work that we've always done. So this has been a real win-win for everybody. As I mentioned, the United States travel market has been really depressed, and JetBlue loves what we give for them. The innovation work, bringing the startups in, the emerging tech, education, all of that work that we've been doing for a really long time is really important to JetBlue. And we've built an incredible portfolio that they actually still own. So this wasn't them selling off the portfolio. It was an opportunity for them to continue to engage in innovation, and an opportunity for their portfolio to continue to succeed, while at the same time giving them a break from maybe investing over the next couple of years. And so it's a real win for us, because now we can expand the work that we're doing. We have the access to outside capital. Our new owner has a huge presence in the capital markets, has just closed a $1.35 billion fund. They're an aviation asset manager, and they saw the opportunity. They have over 100 partners in the airline industry, and so they saw the opportunity for the work that we do to actually help their partners as well. And so the work that we've done for JetBlue, the innovation work, the emerging tech work we've done for JetBlue for 9 years, we're going to be able to offer to other people within the aviation industry, in the greater travel and transportation ecosystem, while at the same time expanding our investment capability and all while still giving JetBlue a lot of what they've always wanted from us in a very positive way. So it was a real win-win for everybody. JetBlue Ventures as a team, we get to continue to grow and expand the work that we do. Sky gets a whole new capability to bring to their partners, and JetBlue gets to keep the innovation and strategic value and a great portfolio of companies that we will exit. Mark my words, we'll find a way that we will exit in a really positive way. So it was a really great outcome that we've been working on for a while. For those of you who know me, know that I have been working on this secret thing for a long time that I can finally talk about, and it closed at the beginning of May. So we are deep into integration with the new entity and planning. We will, like I said, have a greater partnership program with a number of other companies and provide innovation work for those folks. We will fundraise. We are, building, we're putting in place all the various things to launch a fundraise, which I can't talk about more than that, but that it will come, and we're really excited about that and have a lot of really great, really great indicators so far, that's all I'll say.
So just a quick plug for your website. If you get a chance to go look at Amy's company's website, you'll see obviously a well thought out platform, but it's very clear as to your success, right? I mean, it says exit, it says acquired.
Yeah.
How do you sort of view what you went through in terms of the greater market? Do you see this as something we're going to see more of? Was it, do you think, fairly bespoke? Do you have a view on that?
I think, I've been thinking about this question because obviously we're here, and I come to all the global corporate venturing events that I can. This is my first time in London, but I spent a lot of time with the gang in the US. And obviously one of the big questions is what does CVC look like? And it looks like a different thing for a lot of different people. And really, I think the most important thing for corporate venture capital is that it works for your organization. And so there are some firms, and I know those firms well, that are incredibly strategically linked and that do investments in things that their mothership actually wants to use on a real-time basis right away. There are some that are M&A focused. There are some that bring innovation in like we did. So we were bring innovation in, but a little bit more financially independent and focused on making the right investments. And then there are some that will be like us, where you're still bringing innovation into a corporate unit or multiple corporate units while being a little bit more independent. So I think corporate venture capital is a lot of different things, and it will work differently for each individual organization. And this is what works for us right now. And for 9 years, it worked a little differently for JetBlue, and that was also great. So I think this is an opportunity for those who are in a similar position. But at the same time, I think that all of the traditional models of CVC are really great and will continue to grow and be strong. I think CVC only has amazing opportunities continuing, and it just may be different for each individual organization.
So as a law firm, we often get asked questions about compensation, fund structure, things along those lines. This is a little off topic, but one I think some of you might find interesting because we get asked it quite often. Carried interest. What's your thought process there and the philosophy, I guess? So
we were a rare corporate venture firm tied very closely to a mothership that has always had carry. We've always considered carried interest an important part of our compensation. And I can't remember who said it this morning, but it's about retaining and attracting and retaining the right talent, right? My team is made up of two different types of professionals. One is a deep venture professional whose experience in their career has been venture investing. And the other side is a more innovation-focused individual who may come from travel and transportation companies. But we actually are all integral in finding the right startup, investing in the right startup, and bringing the right startups to corporates that we're associated with. And so we've all had carried interest across the firm since the very beginning. And I think that's been a really important part of attracting people to JetBlue Ventures, and it will continue, obviously, to be an important part of our fund going forward into the future. And we've been lucky that we actually have had some exits and some distributions, and we do have an actual positive DPI, which is kind of rare right now. And so, that's been an important part, and will continue to be.
So as we began to shift towards thinking about 2026, big year for you, obviously, first full year of the new fund. How do you sort of envision 2026 unfolding? Has the strategy, because of the new sort of fund structure, changed at all? I would imagine it's quite a significant task to plan, not only for the new year in light of this, but also a new fund.
Yeah, you're literally talking about what I'm doing with my team right now, is figuring out kind of what do we look like going forward. And the good thing is the intention is for us to do a lot of the work that we're doing now. But the caveat to that is that we are going to expand our focus a little bit. We've always had kind of the greater travel tech ecosystem as where we invest as well as find innovation, but we're really, expanding that to be anything travel and transportation. And what we like from an investment perspective is a startup that actually addresses a problem or an opportunity across multiple aspects of travel and transportation. We've never been an aviation-specific fund anyway, but this just allows us to really expand beyond, because the partners that we have and that Sky Leasing has are beyond just individual airlines. It's throughout the entire ecosystem. So we will expand kind of our scope in terms of the industry, but then the other piece of it is changing a little bit our themes on what we invest in. We started in 2016 as being fairly strategically focused. So the things we invested in were things that may not necessarily be used immediately by JetBlue, but were of interest to either JetBlue or somebody like a JetBlue. And then about 2021, we shifted our focus a little bit to be a little broader, more strategic to the industry, is what we say. So we expanded into like, is it strategic to the industry? Yes. Is it a good financial deal? Yes. Okay, investment. And going forward, that's still going to be the case, but we're a little bit, we'll be a little bit broader. We're more generally focused on things like enterprise tech. That'll be probably about 70% of what we invest in. And then the rest will be frontier tech, but it'll be very specific types of things within frontier tech. Think, quantum computing and next gen mobility and, drones or robotics or, things like that. And it's just going to be, again, more broadly strategic to all of travel and transportation.
So I'm curious, just keeping on that for a second, I want to come back to the sectors, but, it's interesting. How did the portcos react to the situation?
Well, there were a lot of questions, as you can imagine. A lot of questions about, well, what does this mean for me as a portfolio company? First of all, we're very, very engaged with our portfolio companies, just like a lot of all of you are. One of the things that our innovation group is tasked with is portfolio success. And that means everything from introductions to clients to, helping them figure out their technology. Because we have such deep knowledge within our industry, we can tell a startup, hey, this is a great idea and this is great technology, but it doesn't quite work in this way. So help them kind of build out what they're trying to accomplish. And so we're still that firm, like we're still very engaged with our portfolio companies, and always will be. Really, the question for them, of course, the next thing they ask is, well, what about money? Like, are you investing? Is JetBlue investing? Is the new firm investing? Who's going to invest in us? JetBlue retained ownership of all of the portfolio companies, first and foremost. But that doesn't mean that the opportunity doesn't exist for the new fund to also participate in those portfolio companies. So everything's very, cohesive and friendly, and we'll seek out the right opportunities for both JetBlue as well as the new fund. And so that will hopefully benefit. It's, I think, a benefit for our portfolio companies more than anything.
Yeah, again, outside looking in, it certainly sounds that way, but it must have been a massive task. You have 50?
We've invested in 55 over the course of time. I think we've got currently 45 active. We haven't lost that many. We're pretty good at picking the ones that stick around in our sector, but 45 active, it's a lot.
Yeah, that's a lot. So coming back to kind of the sector analysis and questions, it may be a little bit broader than just JetBlue Ventures. What do you see as sort of the sectors that are, sort of attractive for the right reasons, and maybe some that, perhaps were attractive and have lost a little bit of that luster?
So one of the things that we've invested in a lot over the course of the last several years, and it followed the kind of strategic nature of the industry is climate tech. So we'll talk about climate tech for a second, which is a tricky topic, especially in the US. The aviation industry has a very large, lofty goal of decarbonizing by, I think it's 2050 at this point, being net carbon zero. JetBlue had a goal of 2040. And one of our tasks as the corporate venture capital firm of JetBlue is to invest in climate tech that we thought could help them move the needle. And so we did. We've invested in, I think it's 12 different climate either funds or companies over the course of our existence. And they're all great companies. We've lost a couple, but for the most part, they're really doing well, and we're excited about that. But it's a tricky time in the US for climate tech, as we all know. And in addition to that, for our new fund, we're going to be very picky, for lack of a better word. I'm trying to think of a better word than picky, but
Targeted or
specific, very specific about the things that we choose for our frontier tech category. And we've invested in some really great climate tech companies already. So I think we'll do less of that in the future, but it's not that we don't love the companies we have in the portfolio and that we think that there's lots of opportunity in this space. It just might be a couple years before it really comes back. So that's an area that maybe we'll step away from a little bit. We're very interested in enterprise tech solutions, especially things like cybersecurity and operational efficiency and data infrastructure and applications and of course AI. Of course you got to say AI. But I mean we are interested in how AI can work against the huge data sets within travel and transportation and help you optimize operations. Like that's really the sweet spot that we're concerned with. Less around consumer facing Gen AI solutions. That's not really our interest. Our interest is really like how do we make an operational company like an airline operate more efficiently through data tools that are AI based against the data sets that they have like huge amounts of, right? And so that's something we've been looking at for a while. So I think a lot of what we're going to be looking for is things like that. And cybersecurity and fraud detection is a huge part of travel and transportation. It's huge. I mean, it's an issue for everybody. Let's not kid ourselves. It's a very, very large issue in travel and transportation. So
we use the word in these rooms a lot, innovation.
Yeah.
What does innovation from both an investment and a partnership perspective mean to JetBlue Ventures into the new world?
So we've long had a really deep innovation program. And yes, what does that mean? What does innovation mean? So the way we think about it is even separate from the things we invest in, we're here to bring like emerging tech into the industry and teach the operators what they could do with new technology, with startups. It's really challenging for especially a big operating company. I know a lot of you guys are in operating companies, but like if you're in a big operating company, the people doing the day-to-day don't have the time to seek out what is the newest thing in their space that's going to transform the work they do. And that was always our job, is to find those interesting things and bring them in. And that could mean we're looking for things that have nothing to do with what we'll invest in. Like we've done innovation sprints for, the people team and the legal team and, sourcing and company, parts of the company that we don't actually invest in. But that has always been a big piece of our DNA, is how we teach the organization what is available, what will transform their part of the business, and help them like actually engage with the startups. Because that's another thing that's really hard for corporates. How do you actually work with a startup, and how does the startup work with you? And so we are that translator a lot. So for us, innovation means like teaching everybody what emerging tech looks like and how they can use it, and helping them actually like get it done, doing proof of concepts, things like that.
And do you think how does that change, I guess, as you don't have necessarily the corporate?
You know what, we're going to do that for a lot of people now.
Okay.
That's what's going to change, is we have a lot of partners within the Sky family and others within travel and transportation that we know well that can't do that for themselves. They don't have a firm like a JetBlue Ventures associated with them. So we're going to help a lot of people.
Excellent. So technology, right, is the other word we use a lot. How do you see sort of the tech markets reacting to this situation? How do you see kind of the interplay between technology and innovation, and how do you look at tech investments maybe differently than other types of investments, maybe an AI pure investment or something along those lines?
That's a good question. I don't know. We're really focused and diligent about and just really structured around how we look at companies. I'll start there because that's easy. Yeah. We're very, like everybody. I've heard that already today. We have a very structured due diligence, program or function, and. We are looking for very specific things in a startup that we are going to invest in, for example. And so that is true no matter what type of company it is. I mean, yeah, some of the inputs into that might look a little different. Maybe it's a frontier tech company that, has a longer, revenue timeline. And so did you take that into account? But otherwise it's pretty much, we have a very structured program. From what we bring into an organization, we're really, the way we think about it is we're not looking at specific types of technology, we're looking for use cases. And so actually one of the things we think is really cool and compelling is we invest in startups that have nothing to do with travel per se. They are not a travel startup. They are a really interesting technology company, and we can see the use case that they would have for a travel company, and we'll help them develop that. And so we do that a lot. And those are some of our favorite investments, are just really totally different types of, our last investment in 2024 was a spatial analytics data company that will be able to help you create a digital twin of your operation so that you can game theory out what will happen when that huge snowstorm hits. So it's a use case within travel that isn't they're not a travel company. Mm-hmm.
So as a lawyer, somebody mentioned in the prior session something about due diligence and mm-hmm. sort of that process. Obviously, that's something we spend a fair amount of time doing. How has your due diligence process maybe changed or morphed over the years to be more reactive to technology trends, maybe intellectual property trends, things along those lines?
I think those things have grown up and become more mature. Those parts of our due diligence, kind of program. I think really what the big change is for us over the years is we were very strategically focused in the earlier years, and so less focused on what the financial return profile looked like for a company. Not that we weren't interested in that, of course. We're trying not to lose money.
No one likes to lose
money. Nobody wants to lose money. There's nothing strategic about that, as we like to say. But we're much more picky, I guess, again, structured, what's a good word for that? We're much more, diligent about making sure that it's going to meet our financial exit targets and, kind of the growth path that we want to see in a company. And so that is a box that is a little bit bigger than it used to be, and it's much bigger than it used to be.
Yeah, we've certainly seen that as well. Yeah. In terms of just CVCs in general, even VCs to a certain extent, their focus on diligence has certainly shifted a little bit, and especially in times like this that are a bit more challenging when money isn't maybe quite as readily available as the circumstances.
So we're definitely a little bit more, selective.
So, final question. We've got about 2 minutes here. Okay. What would you like to leave with the audience here in these times? Welcome your thoughts.
Oh, I don't know. That seems like a big question. But no, I would actually less about what do I think about these times, crazy times, but more in general about corporate venture and as the firm that just spun off, as opposed to some other firms that have doubled down internally and launched gigantic new funds, which is fantastic. I'm excited for everybody. Like I said, the model of CVC looks a little different for everybody. I would say that if you poll everybody in this room, every single one of our programs is a little different. And so, yeah, we have maybe a little bit more different than the average now that we've become a kind of more independent entity, but we're still bringing strategic value to our industry, and that's actually the point of this, is that we're going to be great investors, and we're going to find the right deals, and we're going to make all the returns that we think we need to make, obviously, but we're here to bring strategic value to our industry, to travel and transportation, and that doesn't change. So yeah, we may look a little differently than we did before, and I know it was for the folks who knew me or know us, it was a little bit of shocking big news that we spun out, but we are still the firm that's going to bring innovation into travel and transportation. That has not changed.
Amy, thank you very much. To the audience, thank you. Hope you enjoyed the balance of the week, and appreciate your time.